What is up, guys? Dirk here. It is Tuesday. It is March 21st. I just wanted to give this quick update because tomorrow, on Wednesday the 22nd, we have the FOMC meeting when the US lets us know the interest rate decision and also, what's more important, the outlook on the potential rate situation with more hikes or more pauses or cuts or whatever they're going to say. And the whole market is watching that. Obviously, because what is happening with the banking situation, it's just fragile. There's a lot of fear going around, a lot of rumors going around that so many banks are insolvent and all this kind of stuff. And they're talking about, they're going to guarantee all the depositors, and it's just all pretty much pretty fearful. Okay. Now, what I want to bring to your attention here too is that I know the last couple of videos that I made on the higher time frames have all been bullish with upside targets, right? But I want to give you the other side of the coin with something that's developing here, which is the bearish divergences, which could potentially be a warning sign for a shorter term pullback. Now, keep in mind, you can be both bearish and bullish at the same time, depending on different time frames. So the video I made yesterday about the weekly reclaim of the 50-week moving average, that is bullish. But on the weekly time frame, those trends take weeks and months to develop. Whereas on the shorter time frames, we obviously have market fluctuations with that. So we can still be bullish on the higher time frame while the shorter time frame gets a correction. Like, for example, now Bitcoin is at 28,000. So I can still stay bullish on the weekly chart, but potentially expect a correction to maybe 25 or 24,000 in the shorter time frame. So this video is about that potential pullback. And I would just want to break this down for you, especially with the FOMC. Like, they can send this in whatever direction they want, depending on what they're going to say, and the markets are obviously going to react. So we're probably going to get a big move in some direction on that FOMC statement tomorrow on that decision. So what we are seeing here is we are seeing the bearish divergence with the RSI. As you probably know if you've been following me for a longer period of time, it's one of my favorite indicators for longer term reversals, especially on higher time frames. Okay, on the shorter time frame, they don't matter as much, but when we start looking at 4-hourly, especially 12-hourly and daily time frames, these divergences become good warning signs, and they're not 100% accuracy thing. Okay, and as you can see, some of them take longer than others to develop. For example, now we've been creating this bearish divergence here for almost 2 months on the 12-hour time frame, whereas here in August, when it went to 25,000, we also had a bear divergence, and it went from 25 ultimately all the way to 15. We had the bearish divergence here at the top at 69,000, and that obviously took us all the way down. So I'm sure you can also find examples where you have a bearish divergence, but it ends up trading sideways or pulls back and continues higher. Okay, that is possible, but this is something that is here right now. We have swept both of these highs. Okay, so we got above this, more than swept. We spent quite a bit of time above this. We also filled the CME gap. So let me switch over to that. At $28,000, you can see the CME gap over here. Just in the same way that we filled it at 20,000, we have now filled it over here. And there is still a CME gap higher up, all the way up to 35,000. So that is why on the weekly time frame, there is still potential for upside. Okay, that hasn't changed. But like I'm showing you over here now on this 12-hourly time frame, we do have this divergence. Okay, you see we have this higher high, but the RSI is lower. We filled the CME gap, which might have been an objective. There is potential that we do see a shorter term pullback. And what I would be looking for is the obvious potential retest here is a retest of these highs. So this was here a level of resistance. We broke back above it. Retesting it would be great if we bounce off it and then continue higher. So that level is 25.3 to about 25,000. So that would be a $3,000 pullback. Imagine that happens in the span of a single day. Maybe on the announcement tomorrow with the interest rates, that would cause quite a bit of fear. But once again, in a similar way, like we saw the retest of the 3-day 50 moving average to 19.5, and then it bounced back very quickly, that is still a possibility. So in the shorter term, a pullback is a possibility. And just like I said yesterday on the weekly chart, as long as we stay above the 50-week moving average, as long as we don't get a new weekly close below that, which is 23,000. So as long as we stay above 23,000, with the weekly close, the bullish trend is still bullish in my opinion, and we are still targeting upside Here, potentially 32,000, the CME gap 35, and then maybe as high as the Fibonacci Golden Pocket. But in the shorter term, we could see a drop back to 25, maybe even 24, maybe even 23, who knows. But as long as we stay above 23, for me, that is good. And that might give you the ability also to, if you're looking for a long position, or if you're doing any kind of shorter term trading, perhaps that could be a better entry point if you're looking to get into the market and you're feeling a bit of FOMO. Usually it's better to enter on those pullbacks rather than try and chase and FOMO along there. So I just wanted to bring this to your attention. Actually, if you look on the 4-hourly chart, and if you look on Ethereum too, there's also these divergences present. You can see the same divergence. So it's not only 12-hour, it's also 4-hourly over here. It's also present on Ethereum. So likely the odds favor some sort of shorter term pullback. But let's see if we get that pullback. If it's around 25K, if that ends up holding, that might actually be a good entry point for a long towards continuation to the upside. So let's see what happens in the FOMC. Either way, hopefully this updated you. Smash the like button, subscribe down below. Stay careful with any leverage positions, always manage your risk, and I will see you in the next video.